China and Saudi Arabia just signed a game-changing oil deal. Could the U.S. be in trouble?
So what we know so far is that President Xi Jinping has expressed a willingness for China to increase its collaboration with Saudi Arabia in terms of energy. So that includes buying more oil from Saudi, but also it includes signing some agreements when it comes to solar, when it comes to hydrogen.
For decades, the U.S. dollar has dominated global oil trade. But that might be about to change because China and Saudi Arabia have just signed a historic oil deal that could shake the foundations of the global energy market, and Washington is watching closely. For years, China has been pushing for oil transactions in yuan instead of U.S. dollars. Saudi Arabia, one of the world's largest oil producers, has always stuck with the petrodollar system. But now, that's starting to shift. And if this deal is what it looks like, it could weaken America's economic grip on global energy. Does this mark the beginning of the end for the petrodollar? How will this impact oil prices and your wallet? And most importantly, what does this mean for U.S.-Saudi relations moving forward? For decades, the global oil market has revolved around one key principle: the petrodollar system. Since the 1970s, nearly all international oil sales have been conducted in U.S. dollars, cementing the dollar's dominance in global finance and giving the U.S. unparalleled economic leverage. But now, China and Saudi Arabia are taking steps that could change this system entirely. This isn't just another trade deal. It's a direct challenge to a system that has underpinned American economic power for over half a century. If Saudi Arabia starts selling oil in Chinese yuan instead of dollars, the global balance of power in energy markets could shift dramatically, and the consequences for the U.S. could be severe. To understand how we got here, we need to look at the long-standing relationship between the U.S., Saudi Arabia, and China. For decades, the U.S. and Saudi Arabia had a mutually beneficial arrangement. The Saudis agreed to sell oil exclusively in dollars, ensuring that global demand for the U.S. currency remained high. In return, the U.S. provided military protection and political support. This petrodollar agreement helped stabilize oil markets and reinforce the dollar's status as the world's reserve currency. But in recent years, cracks in that relationship have started to form. The U.S. has ramped up domestic oil production, reducing its reliance on Middle Eastern energy. Meanwhile, Washington's growing criticism of Saudi Arabia over human rights abuses, the war in Yemen, and the killing of journalist Jamal Khashoggi has strained ties between the two nations. At the same time, China has emerged as Saudi Arabia's biggest oil customer. Beijing imports more oil than any other country in the world, and Saudi Arabia is its largest supplier. For years, China has been pushing for oil deals to be settled in yuan instead of dollars. Until now, Saudi Arabia has resisted, sticking with the petrodollar system that has defined global energy trade for decades. But that's starting to change. As the 50-year petrodollar agreement nears its end, Saudi Arabia has declined to renew it. With its growing economic relationship with China and increasing discussions about settling oil trades in yuan, the timing can't be a coincidence. It's important to note that Beijing has already signed similar agreements with Russia and Iran, allowing them to bypass the US dollar in energy transactions. If Saudi Arabia follows suit, it would be a seismic shift in global finance. Over the past few years, China has aggressively promoted the yuan as an alternative to the dollar in international trade. The Shanghai International Energy Exchange launched oil futures contracts priced in yuan. Beijing has expanded its Belt and Road Initiative, strengthening economic ties with dozens of countries. And now, with Saudi Arabia agreeing to yuan-based oil sales, China is taking another major step toward reducing global reliance on the dollar. Now, the major question is, how would this affect global markets, U.S. influence, and oil prices? This deal isn't just about oil. It's a direct challenge to the U.S.-led global financial system. For decades, Washington controlled energy markets through the petrodollar, ensuring that oil transactions flowed through the dollar, reinforcing its status as the world's reserve currency. That dominance is now under threat. Saudi Arabia moving toward the yuan weakens America's grip on global trade. It opens the door for other nations, Russia, Iran, even U.S. allies like India, to bypass the dollar altogether. Countries that were once forced to rely on the US financial system now have an alternative, one that isn't tied to Western sanctions or policies. This could fundamentally shift the balance of economic power, with Beijing at the center of it, but the fallout doesn't stop there. Oil prices could become even more volatile as pricing power shifts from the West to Asia. Right now, global oil prices are largely determined by Western benchmarks like Brent crude and WTI. If China builds a yuan-based pricing system, oil markets will start reacting more to Chinese demand than to traditional Western financial centers. That means less stability, potential price surges, and a system that prioritizes Asia's energy security over global market balance. For the US, this could lead to higher energy costs and economic uncertainty. If fewer oil transactions are conducted in dollars, demand for the currency weakens, potentially leading to inflation and financial instability. It also reduces Washington's ability to enforce economic sanctions, as nations would have an alternative system outside US control. None of this is happening in isolation. If Saudi Arabia continues down this path, the US might respond. Washington could pressure Riyadh by limiting arms sales, scaling back security agreements, or even imposing economic penalties. There's also the possibility of diplomatic retaliation, strengthening ties with Saudi Arabia's regional rivals or pushing allies to resist the yuan's rise. The consequences of this deal go far beyond energy. It's a fundamental shift in global power, one that could reshape alliances, disrupt financial markets, and permanently weaken US influence. And that raises an even bigger question. How does this affect the future of energy itself? This shift could have massive implications for OPEC. Saudi Arabia, as the cartel's de facto leader, has traditionally balanced its output between US and global demands. But if China becomes its primary financial and energy partner, that balance changes. Riyadh could start coordinating production cuts based on Beijing's needs, sidelining Washington's influence over OPEC. This would be a major shift in energy politics, one where the US has far less control over global oil supply and pricing. But there's another layer to this. Energy itself is evolving. Saudi Arabia and China aren't just talking about oil. This deal includes cooperation on renewable energy, hydrogen, and infrastructure projects tied to Saudi Vision 2030. China, the world's leader in solar panel production, sees an opportunity to expand its renewable technology into the Middle East, while Saudi Arabia is investing heavily in green hydrogen as a future energy source. If this partnership deepens, it could accelerate the global energy transition, reducing dependence on fossil fuels in the long run. However, this doesn't mean oil is going anywhere. The world still runs on it, and China knows that securing long-term supplies is critical to its economic stability. What's changing is who controls the market, how it's priced, and what that means for the future. The US is no longer the sole power dictating energy policy, and that shift could ripple through every corner of the global economy. China's ambitions in the Middle East go far beyond oil. The growing partnership with Saudi Arabia is part of a much larger strategy, one that directly challenges US influence in the region. The first major sign of this shift came in December 2022, when Beijing hosted the first China-Arab States Summit and the China Gulf Cooperation Council Summit. These weren't just diplomatic gestures. They were the foundation of a new economic and strategic alliance. During these meetings, China and Saudi Arabia signed 34 agreements covering everything from energy and infrastructure to banking, security, and even aerospace. But President Xi Jinping made it clear that two areas were top priorities: shifting oil and gas transactions to the yuan and expanding China's role in nuclear technology. For China, this isn't just about economics. It's about global power. Beijing has been pushing to elevate the yuan as an international reserve currency for years, seeing the dominance of the US dollar as a direct threat. Since 2017, China has been the world's largest crude oil importer, meaning it remains vulnerable to the pricing mechanisms controlled by the dollar. That vulnerability became even clearer after Russia's invasion of Ukraine, when US-led sanctions cut Moscow off from dollar transactions. To China, this was a warning. If Washington could weaponize the dollar against Russia, it could do the same to Beijing. That's why replacing the petrodollar with a petro-yuan has become a top priority. Chinese officials have openly stated that the long-term goal is to break the dollar's grip on global markets. And this deal with Saudi Arabia is a major step toward that objective. The implications of this shift are massive. The petrodollar system has been a pillar of U.S. global influence since the 1970s, when Saudi Arabia agreed to price its oil exclusively in dollars in exchange for American military protection. This arrangement ensured constant global demand for the U.S. dollar, strengthening its status as the world's reserve currency. It allowed Washington to print money, fund its deficits, and exert economic pressure through sanctions without destabilizing its own economy. But if major oil producers like Saudi Arabia start accepting yuan, it undermines this entire system. Other OPEC members, many of whom already trade extensively with China, could follow suit. The result would be a global economy where energy transactions are no longer dollar-dependent, reducing Washington's ability to control international trade and finance. The second priority is even more controversial. China isn't just investing in Saudi Arabia's energy sector. It's actively helping the kingdom develop its nuclear capabilities. U.S. intelligence agencies revealed in late 2021 that China was assisting Saudi Arabia in building ballistic missiles, a move that set off alarm bells in Washington. Saudi Arabia has long expressed interest in developing nuclear power, with plans to bring 2 nuclear reactors online by 2030 and expand to 17 gigawatts of capacity by 2040. Initially, the kingdom sought U.S. technology under the strict 123 protocol, which would have prevented it from enriching uranium for military use. But with Washington reluctant to provide nuclear assistance without heavy restrictions, Beijing stepped in. China's growing involvement in Saudi Arabia's nuclear program raises serious geopolitical concerns. For years, Beijing has played a key role in Iran's nuclear development, providing equipment and expertise despite international pressure. Now, by helping Saudi Arabia pursue its own nuclear ambitions, China is positioning itself as a dominant player in Middle Eastern security affairs. The big question is whether China will impose the same restrictions the U.S. demanded, or whether it will give Riyadh more freedom to pursue weapons-grade enrichment. If Saudi Arabia gains nuclear capabilities, Iran will see it as a direct threat, further escalating tensions in the region. And if both countries develop nuclear weapons under China's watch, Beijing will have enormous leverage over 2 of the most powerful states in the Middle East, potentially at the expense of U.S. influence. This is where the stakes get even higher. The U.S. has relied on its military and economic dominance to control Middle Eastern affairs for decades. The petrodollar system gave Washington the power to dictate economic policies. Its military alliances ensured compliance from key oil producers. But with China cementing its presence in Saudi Arabia, not just through oil, but through nuclear energy, weapons technology, and financial systems, Washington's grip on the region is slipping. If the petrodollar weakens and Beijing continues expanding its influence, this isn't just an economic shift. It's a complete restructuring of global power. The U.S. now faces a dilemma. Should it push back aggressively, risking a major escalation with China and Saudi Arabia? Or should it try to adapt to the new reality, even if it means losing its stranglehold on the global economy? Either way, the balance of power is shifting, and the consequences will be felt worldwide.